All right, everybody. Stocks by the numbers. Welcome back. Wanted to do a quick review here as per request. British American Tobacco Industries, ticker symbol BTI, listed here on the New York Stock Exchange. Stock right now closed 33.35, down 17 cents, roughly 0.5% here on the day. This is a tobacco company defensive stock, which basically shouldn't be confused with defense or defense stocks. Again, defense stocks, you're talking companies like General Dynamics, Lockheed Martin. Defensive companies are companies technically that the business really shouldn't be disrupted, kind of no matter what's going on, and you have that stable, steady revenue and business coming in, right? We talk companies like companies in the sectors of, tobacco, alcohol, things like that, right? They're kind of going to maintain or potentially even grow their business if the economy or life gets better, worse, stays the same, doesn't matter. So, defensive company here, BTI, market cap right now 74 billion. The company has now climbed the dividend slowly back up to where it was at around those lockdown levels, and now we're getting a dividend yielding out 8.75%. So I can appreciate the fact as to why this is on a lot of people's radars. We have earnings coming out soon. We have a healthy dividend. We technically have a defensive stock that just bottomed out and is slowly climbing back up. Again, this company is based out of the UK, obviously British, but they have some decent brands under their umbrella, and you can see, they got Dunhills, Lucky Strikes, Pall Malls. So if you wanted a defensive stock and you wanted a European company, obviously, paying you a dividend, I can totally appreciate the appeal of something like a BTI, or potentially if you're based out of the UK. Again, I'm here in the States, so I know that some of our accounts are a little bit different, and the way they're taxed, what you can buy, what you can't buy. I know a lot of people tell me, they're unable to buy options or, certain things like that. So if, you're kind of, forced, I guess, to buy, local companies or European companies. I mean, a tobacco company paying out, an 8-9% dividend to you could be worse, right? So BTI, technically, if we look at some of the fundamentals, we can see that, they work kind of inconsistent, I guess we can say, bouncing around a little bit. So I appreciate the fact that it's kind of been on the down and down, but technically we're on the up and up now for the last 3 months after hitting these lows. And if we draw out a trend line here from April 16th, 2024, going to June 14th of 2024, you can see I drew that trend line across. Technically, we're still above it, right? So this is our support trend line. So we can come down, of course, at any moment, and we can drop back down to 32, but technically we'll still be above this support trend line, and then we can have a bounce and continue to make higher highs, right? Because right now the stock's making higher highs over the last couple of months and making higher lows as well. So we're steadily climbing. So until that breaks, the music hasn't stopped, right, so to speak. But also on the top side, we can see I went back to this high here. Looks like Feb 17, 22, coming down to December 5th, 2022, just coming down across. And you can see that we're getting close to that top line resistance level going back, about 2 years, 2.5 years. So if we do get above it and close above it, we can potentially see a little bit more than 34. See how we gap down here a little bit? And we also kind of bottomed out at a similar value. What are we looking at here? Yeah, we're looking at about like 34.60, 34.65. So in my opinion, if everything stays the way it is, we do have a good chance to potentially break through this top line resistance, retest kind of this 34.60 level, it looks like, which would technically be a new 52-week high. And then that's going to be the testing point, right? The stopping point, if you will. And not necessarily saying that it can't go to 35, 36, but in my opinion, that's going to be the key level it's going to have to hit. And then it's going to pause, and we're going to have to see where it goes from there. So at that level, in my opinion, are we going to break up to 36? Possible, but then again, we could reject and kind of start to come back down and just kind of retest, like the 33s, and we can try to stay above this support trend line, right? We can continue to climb, but we can go up there about $1, maybe like a point and a quarter, and then we can potentially start to come back down. So in my opinion, that's really the level to watch. Of course, the support and resistance trend lines here as well. But I'm sure you guys understand what I'm saying. And if we come back here, you can see top left of the screen, well, now it's in the middle of the screen, but top of the screen, you can see the O, the H, the L, the C. That's the open, the high, the low, the close. And you can see that the close, 34.60. And if we come right here, you can see right before the gap down, the low, 34.67. So that's why I'm saying, in my opinion, 34.60, kind of 34.70, right? We might break up to that level a couple of cents, and then that's where the real test is going to begin. You know, have they done enough recently to kind of have investors continue to pile in to where we continue to push it higher to new 52-week highs, $35, $36, or does the rejection take place and we come back down to, you know, the low 30s for a little bit and cool down? But let's look at some of the numbers here. 74 billion. We can see the EPS has kind of been hit and miss there. 2 beats, 2 misses. Again, I understand the 2023 profitability kind of dropped hard, but before that, you can see basically maintaining that 33 billion in revenue, jumps up to 35, back to 34, basically closed out 23 at 34, right? So this is what I mean when we talk about defensive stocks. Kind of no matter what's going on before pandemic, after pandemic, doesn't matter. Companies making 33, 34, 35 billion dollars a year, right? Smokers have to smoke. But again, this company reports semi-annually, not quarterly, but you can see before this big drop off here in the second half of 23, you can see that the revenue was basically steady. And of course, the profitability as well, 26%, dips down to 14, back up to 30 plus, and then slight dip back down, staying above 29%. So in my opinion, you know, pretty solid, but overall, I've always looked more at Philip Morris as the leader in the sector. So, of course, I'm personally going to lean more towards PM. But again, I mean, you know, if you like BTI and you think, you know, they bottomed out, they're undervalued, they're making a nice rebound, they pay a nice dividend, you know, I can completely appreciate you. You don't necessarily have to go balls to the wall with an argument to convince me, if you will. But EPS went negative, so we have no PE ratio. Price to sales right now, 2.2, right? That's what it was before the big dip. It dipped to less than 2 times sales. Now we're back at 2.2, but you can see before that we were sitting at like 2.6, 2.7, right? So it could be viewed as undervalued if you look at a lot of these metrics. That's why I can appreciate the appeal of it right now. Price to cash flow down to 6.5, was down to 5.6. Before that, 7.89. So this is why I say, in my opinion, can continue to slowly climb, and you might see $34.5, $35. You may see new highs here. Bring some of these metrics kind of back to where they were, and then it could maybe pause. You might have a handful of people taking profits, rolling into something else, right? So that's why once we hit that level, in my opinion, that's where we have to potentially reevaluate quickly to see if we're going to try to go higher or if we're going to reject and go lower. But we can see price to book now is the highest it's been going back the last several quarters, a little over 1.1 times book. And we'll look at the balance sheet quickly because the company technically lost a chunk of assets on the balance sheet by about 30 billion. So that kind of threw a couple of these fundamentals out of whack for a little bit. But the enterprise value, supposedly what another company would be willing to pay for this company, you can see 118.5 billion. Current market cap, 74 billion. So we are trading basically like 60% below supposed enterprise value. But as I say, in my eyes, I understand some stocks like GameStop, you know, were getting beaten up and shorted a lot by basically every institution from A to Z. So I know there are some exceptions to the rule, but I just want to say, for the most part, when a stock is in a steady downtrend for years, kind of like what you saw with IBM, right? People were kind of consistently jumping on when they could and shorting shares for a reason, right? That's kind of my point, what I always say. Like, when you see a stock down, oh, the short interest is up, what's going on? It's probably shorted for a reason, right? The operating margin dipped down. They guided that the next quarter or two earnings were going to be light, so people started shorting the stock because it was going to go down, basically, right? But if we come here, let's continue. Going off on a tangent. It's one of the things I do best. But you can see our return percentages went negative. The gross margin percentage back up to over 70.5%. Technically not the highest it's been. However, going back, you know, the last several semi-annual reports, you can see that they were maintaining 68, 69%. Now it's back above 70% on the gross margin. So this is why, again, over the last 1 to 2 reports, kind of after they bottomed it out, and now some of these metrics are starting to increase over these 6-month reports, I can appreciate the fact as to why the stock is kind of slowly starting to climb and now potentially testing, potentially testing that 2-year resistance trend line, right? The operating margin, as you see, kind of low to mid 40s, gets up to 45. Now it's at 46.5%. So I can appreciate the fact the stock has been climbing. EBITDA, again, earnings before interest, taxes, depreciation, amortization, as we see, was at 48, drops down to 44%. Slowly been climbing back up to almost 49%, and now above 49 here at 49.25. The profitability, we saw the net margin drop down hard, and of course before that kind of between like that 20 and 30% level. So in my opinion, if you're banking that they're going to turn it around now on this earnings report in a couple of days, and they're going to report whatever, 22%, I would appreciate that. I can understand where you're coming from. If we look at the inventory turnover, we can see it for the most part, it's up and down, but it has steadily kind of been climbing up. We can see we're back above 1.5 right now. Asset turnover, again, how much revenue the company is generating off of said assets on its balance sheet. It is up from 0.18 overall for the most part, now up to 0.2. But again, technically the company does have slightly less assets on its balance sheet. So I'm not exactly sure if this would be a main metric I would use. The debt has kind of been bouncing around, but for the most part, it's kind of up and maintaining a $50 billion level. And we can see that our debt ratios, some of them, again, to the assets, you can see basically relatively flat here from where we started from. The equity, again, the assets affected the equity, and I'm going to show you that in a second. So those ratios are up. And we can see, looking at the balance sheet, we were at 180, 190 billion in assets, and we can see now, to close out 23, the assets dipped down by about 30 billion in change. Now we're down to 151 billion in total assets. Liabilities did drop as well, but only by about 10 billion, going from 93 down to sub 84 billion. Total assets minus total liabilities yields total equity, which brings us from high 80s, low 90 billions to 67.5 billion. That's why, again, excuse me, in my opinion, those debt to equity ratios, this is why you're seeing that jump up, right? Because the debt kind of been maintaining that level. Equity, assets just took a dip down, right? But you can see the debt right here. See, we were up to like 60 billion. We come back down sub 47 billion, then we're back up to above 50 billion, right? So we're kind of still waiting for the storm to pass, so to speak. But again, I mentioned that these figures will affect the book value per share, and you can see that we've gone from the high 30s, potentially above $40 a share. Now the book value is $30 a share. So technically, we're still trading a little over 1 times book again, but in my opinion, if it kind of does nothing in the short term, I would understand. However, again, I usually give most companies the benefit of the doubt, right? I'm sure the board and the business overall made these cuts and these decisions for a reason. So this is why I say, through the restructuring phase or the potential rebuilding phase that some companies go through, if you truly believe in the long-term turnaround, growth, rebound story, then in my opinion, obviously continue to build the position, drip the dividends back in, kind of accumulate all of those shares during that downswing, and then as the rebound and the growth starts to come back in, obviously you're sitting pretty. But in my opinion, it's not that bad. But the debt, of course, kind of has to come in line. Also, before we look at the debt, let's look at the earnings as well. And you can see EPS on the semi-annual reports, more beats than not, 5 beats, 3 misses. If we go over annually, you can see the company has been pretty solid going all the way back to 2016, showing nice growth and also beating 6 of the last 8 years. But also you can see the growth kind of maintained. and now even higher than where we were at that 2019-2020 level, right? A lot of companies went down negative. It took this many years for them to get back to where they are. But you can see something like BTI just kind of maintaining that steady profitability, that steady revenue coming in. This is what we mean when we talk about defensive stocks. So over the longer term, it actually looks pretty decent. Here on the semi-annual side here, the revenue, I do like that the revenue chunked up here to north of 19 billion. I think that was an excellent beat. You can see 3% beat. Haven't done something like that since the second half of 2020. And then, of course, they went on a couple of misses. But 2023 has been a pretty decent year, it looks like, on the revenue side for BTI. And now going into 24, again, you can see we add those up. We're looking like about 33.5 billion for 2024. So this is what we mean when we talk about stability. But we were doing okay. We got a little rocky for 2 years coming out of those lockdowns. Now for 2023, right, we're potentially back on track, revenue back up, even though very, very, very slight miss on the EPS side. And now we're potentially rolling into 24. So if you're telling me, in your opinion, you're expecting like 16.5 billion and like 17.8 billion, and you think they're going to come in above those estimates, I would probably give the company the benefit of the doubt. On the annual side, hit and miss, basically 50-50. But again, you can see kind of maintaining that 35 billion throughout and coming out of those lockdowns. Now we're back up to 34, expecting a slight dip here, and then we're back up to 35, 36, potentially 37. So only time will tell. I know recently also I looked at some news, and we can see FDA issued marketing granted orders for the Views. I guess it's called Views? I don't know. But basically an e-cig, right? E-cigarette. And you can see tobacco flavored pods, sealed, pre-filled, not refillable. Does not mean these products are safe, nor are they FDA approved. So we could potentially have some more good news on the horizon here. And also, I think overall this is good news because we've kind of demonized smoking, right? Kind of not as cool as it was a couple of decades back. So now you're seeing the popularity, the growth in a lot of these e-cigarettes and smokeless tobacco products. You know, like your Skulls, your Copenhagens, and you have, now there's like the Zyn pouches, right? So there's a lot of stuff around now, a lot of alternatives to where these companies can still make their revenue and have products on the shelves, but it's not necessarily cigarettes, right? It's not that, it's not viewed as that old school kind of dinosaur business, right? Because you have to grow, you have to adapt. As you see here, it shows the article, Philip Morris expanding with a $600 million Colorado plant, which we spoke about recently. But overall here, yep, we're looking, U.S. authorizes. Launch fruity flavored vaping brand without nicotine. Well, I know a lot of people were opposed to the fruity flavors, but perhaps if it has no nicotine, it might not be an issue. U.S. Sorry, my mouse wheel's on the fritz here. U.S. urges dismissal of lawsuit demanding menthol cigarette ban. Golden Cross a couple weeks back. Actually, that was a month ago. Share buyback. Reduce its share capital. Okay. Repurchase shares until July 24th. Hey, wow. Plans to cancel the shares acquired during the closed period. Okay, very good. All right. So, actually, let's look at how everyone feels about this. Oh, we only have 2 analysts covering it, and both are giving it a strong buy, so I guess that's a good sign. Average price target $39 a share. That's almost about 20% growth from where we are right now. But yeah, has been hit and miss, but it does look like we're potentially on the rebound side of everything. And I just wanted to look at the debt real quick. And you can see here, look, see how the dividend got up to 292, then it had to dip down to 262, and then they started climbing it back up. 288, almost back to where it was, 292 for 2023. And you can see the debt was up to about 60 billion here at 2020 and has come down, got down to 46, back up to 50 to close out 23, which is basically where it's sitting now. And the cash flow and the cash itself has kind of been bouncing around. And you can see that we closed out the second half of 23, free cash flow 785 billion, cash on hand about 6 billion. Before that, free cash flow was about a billion less, and cash was almost 2 billion less. But you go back to 21, you can see free cash flow was higher by about a billion, but cash on hand was about 2 billion shy. So a lot of these numbers do bounce around every couple of months, it looks like, for BTI, but overall, technically, still on the positive side of things. And while I personally don't like that debt, I do like the sector that they're in. I do like the dividend. I do like the stability of the revenue. And if we look at the quote-unquote fair value, in my opinion, we have 67.5 billion on the equity side, debt of about 50, which would bring us down to about 17 billion. And let's not even look at profits. Let's just look at the revenue coming in. So that would be 34 billion plus our 17 would be about 51. And cash on hand was 6, so we're at about 57. So yeah, like what's that? 1.2 times quote unquote fair value. Yeah, in my opinion, it could go higher. In my opinion, it could go higher, especially over the longer term. If you're asking me in the next 2 days, where's it going to go? What are earnings going to look like? I mean, honestly, I have no idea. But I'd probably give them the benefit of the doubt. And again, because it's a stable stock and they pay a dividend, right? Even if it does miss, you might see, a drop down to like here, 31.80. And even if it does break there, you're going to drop to 30, which, does seem excessive, but, you're talking technically less than a 10% drop. So this is why people buy brand name, stable stocks that pay dividends as well, right? Because even if they miss earnings or you get a slight negative catalyst, it's not the end of the world. You're only going to see 3, 4, 8% drop. You're not going to see 30, 60% sell-offs, in theory. But we can see we've been on the up and up for the most part. We've stayed above this 50-day moving average now for several months. And our RSI now is potentially topped out. But again, we have the run-up in a couple of days. We have earnings coming out. So I can appreciate the fact as to why it's still climbing. People are still piling in. Again, in my opinion, I'd probably give them the benefit of the doubt. But on the daily side, RSI technically above the benchmark of 70. MACD's been steadily climbing. And see how also the 50-day moving average is about 31. So that's maybe where the stock might go. Bottom Bollinger Band about 30 and a third. So like somewhere in that range, in my opinion, would be where the stock could pull back to if they miss earnings. On the weekly side, you can see RSI also topped out here, above 71 right now. So of course, doesn't mean anything. Going back here, you can see early 22, RSI jumped up to 80 plus. So again, this is just an idea. This is just an indicator that some people use. Nothing is guaranteed, but the MACD has been steadily climbing up and up, and you can see the stock is starting to just like beeline and kind of moon straight up. And now we have these earnings, which is why I'm saying if they happen to beat, you could maybe see like that 35. If they happen to miss, maybe back down to 31 in my opinion, but technically both RSIs pretty topped out, and mid-Bollinger Band on the longer time frame 30-20, and of course 200-day moving average basically 30 even. So that's where the pullbacks in my opinion can take place. And technically if we look here, again, we're kind of bouncing steadily off of the support trend line, and now we're ready to approach this multi-year resistance trend line. So these earnings are probably going to be the dictator as to where this stock goes in the immediate short term. But here at 33, in my opinion, I don't think it's really overvalued, and I can appreciate if you do like it. Of course, if it drops and drops to 31.5 and they miss, If it wasn't a horrible quarter, I would probably like it even more at 31.5 if I like it at 33 and a third. And if they beat, in my opinion, yeah, you're looking at that 34.60 level we spoke about, and then of course up to 35 plus. And in my opinion, I'd give them the benefit of the doubt. But that's just me. But again, I follow Philip Morris a little more closely than something like BTI. So, of course, again, in these videos, we talk for whatever, 20 minutes about it, and we look into a stock, we look at some numbers. Obviously, I'm not going to get the entire background of the entire business done for you in the 20 minutes, right? So if any of you, like I always say, are following this a little more closely, if there's something I didn't mention that everyone should know about, please drop it down in the comments section. But I want to show, again, we do a little comparison. We can see, we bring up Altria, MO, and we can see that, oh, wait a minute, because now we're all messed up, right? 1 year chart, and you can see BTI, I understand, was in the restructuring, kind of now bouncing on the up and up, so it's still down 1.5% over the last 12 months. Something like Altria, ticker symbol MO, up, as you see, 7.7%. And then we bring up my favorite, Philip Morris, and you can see Philip Morris over the same time frame is up 12.25%. So again, not necessarily saying that because it's down and the others are up, they're necessarily better. I mean, technically, in theory, but also, we've had a little bit more positive catalysts and a little bit more steady, consistent earnings beats from these American stocks lately. So BTI, again, on the up and up, still down, but in my opinion, over the next couple of months, if the earnings do beat, I can appreciate if it starts to jump up 4.5%, 6% positive going back the last 12 months. But you can see Philip Morris, again, this is why, in my opinion, I do feel it is the best company of the two. And anytime I bring up defensive stocks, see, people will always bring up Altria because I believe the dividend is a little bit higher. Actually, it looks like it's bull flagging right there, potentially ready to make another pop. But yeah, you can see something like Altria could probably pop up out of this bull flag, in my opinion. I'm sure the numbers are steady, but also paying a dividend yielding almost 8%. We have a PE down here at 10. So I can appreciate if a lot of people are looking at these metrics thinking it's more undervalued than something like a PM, and now they're maybe getting out of that and going into Altria. But you can see the dividend technically a little bit higher on the yield percentage side. So usually when I bring up tobacco stocks, people will always say, oh, Altria, just because they're looking at the dividend yield, right? And even though technically you're getting like an extra % or two from MO, the capital appreciation on your principal investment is probably outweighing the slight dividend increase that you've accumulated, right? It would take a while for it to pass the capital appreciation growth of the principal. And again, shout out to all my supporters in the Discord when I was constantly mentioning here that Philip Morris, hey, everybody pay attention. If you wanted a position, Philip Morris is down at 90. Philip Morris is, at 90. It's sub 90. It's at 88. Heads up if you want it. And then look what happens. Now we're back up well above 100, and the stock today, as you see, 111.36, right? So again, not necessarily, this isn't really like to pat myself on the back, but I'm just showing you that, there could be 3, 4, 5 brand names in a sector, and sometimes it's difficult to determine which one is the winner. But BTI overall, again, I like it. I do like it. Would it be my first choice? As you see, again, technically not, but overall, I would give this stock the benefit of the doubt. Probably good for 10-15% growth here from these levels, maybe over the next 12 months. If you want to say, one beat on the semi-annual side, maybe one miss on the semi-annual side moving forward, right? But overall, I can see personally, in my opinion, 10-15% growth. And again, they popped that dividend back up now to those 2020 levels, so you're getting a nice yield for it. And defensive stock, again, could be worse, but I guess I'll give it my personal stamp of approval for BTI. But I spoke for probably way too long, so I'm going to end it there. So once again, to Stocks by the Numbers, I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up, algorithm, right? Helps me get more eyes on the channel. I hate saying that. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, they are very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thanks for your time. Have a good day.